If you're interested in decoding the complexities of China's national security outlook and its military modernization, check out Takshashila's latest expert capsule course offering China's defense in the new era. Visit school.takshashila.org.in and enroll in the course today.
Welcome to All Things Policy, a daily podcast by the Takshashila Institution. We are a bunch of policy nerds based in Bengaluru, and we like bringing fresh perspectives to Indian affairs and Indian perspectives to global affairs. So grab a cup of coffee, sit back, and join us for today's chat.
Every day, it is a new astounding figure. Investments in AI by major companies in the US, China, and Europe are running into billions of dollars, and they're only increasing. According to an estimate by Gartner, global AI spending will total about $1.5 trillion in 2025, this year. And in next year, it is expected to reach a whopping $2 trillion. And this figure includes, when we talk about $2 trillion or $1.5 trillion, this includes software side of things. So we are talking about the model, but we are also talking about the hardware side of things, that is data centers and semiconductor chips. To add to the astoundment, we also keep hearing how certain US companies such as OpenAI, Nvidia, Oracle, Broadcom, and CoreWeave are just investing billions of dollars into each other in a circular manner. Now, let's take the case of OpenAI, for instance, which as a startup is worth around $500 billion. But what about its revenue? That's around only $13 billion this year. So, where are we heading? Is this another tech bubble that will soon burst? Is it then like the dotcom bubble? Can AI companies, realistically speaking, recover their investments that they're putting in AI? To discuss these issues, I have with me Bharath and Rijesh, who are our resident experts on AI at Takshashila. Let me first start with the first question, and a very simple one. What are your thoughts on the staggering investment figures that I've just said that are going into AI in the last few years? What are your initial impressions? What are your thoughts? Rijesh, maybe we can start with you.
So, yeah, I mean, it is obviously a bubble, I think. Uh, and the fact that they're all investing in each other is, you might argue, it's a bit concerning. But I mean, if you look at, for example, OpenAI saying they're going to buy $300 billion worth of data services from Oracle over 5 years, $60 billion a year is a contract. So, one way to think about it is that they're just outsourcing the key part of one key aspect of their input, which is the models and the chips, and they're only focusing on the models. So, I mean, why not? If you're a $500 billion company, if you think that much growth is coming, then sure, it makes sense for you, and you think there's a zero sum game. So the reason why OpenAI is saying we'll tie up for 5 years, $300 billion is they think that chips won't come online as fast. So I need to capture capacity. So from their perspective, that's why it makes sense that that's what they want to do. So the underlying assumption between all of that is that the AI scaling model stays true, and that scaling will continue to provide better performance, and there will be more demand for it. Right now, the question of are their revenues today enough to justify this amount of capex? That I don't really know, but I mean, clearly it's way below how much they're spending in terms of capex, right? So you'd probably have to double your revenues for the next 2 or 3 years in a row to even justify some of it. Whether that's true or not, I don't know that anybody knows that answer really.
Do these figures make sense to you? Like when you hear these staggering numbers, do they add up?
Like I don't know enough to say whether they add up or not, right? That's the problem. Like if I believe that scaling is important and that models will do better with scaling and demand will follow, then I mean, see, as with all financial estimation or modeling, the question is what are your assumptions? Depending on your assumptions, you can justify almost every number, right? That's what every previous bubble has taught us, right? So it depends. I mean, I'm sure there are financial analysts who could very much justify these numbers. But then there'll be other analysts who are like, this is never going to happen. If you could look at the recent past, you look at the jump from GPT-2 to 3 to 4 to 5, maybe not 5, at least till 4, 4.5. You might say, yeah, it is justified, right? But just in an absolute sense, like you were saying, $1.5 trillion is a huge, huge number. I mean, just wrapping your head around, that much of capex in such a short period of time is kind of difficult to do. To me, it doesn't make sense. But I mean, again, I'm just coming from my initial, it's just the sheer recoiling from the sheer amount of it. It's not based on any real understanding of why those assumptions are there, or the assumptions of the people who make putting in that money.
Bharat, do you agree with Rijesh on this?
So I agree with Rijesh, but maybe to your question about the timelines and the amount of capex that's being invested versus the amount of returns that they're seeing, I guess it's a longer game that they're playing, and they see that there is enough benefit to be had in some kind of an end game or capturing a significant part of the market that justifies this thing. So you're not looking at a short investment cycle where you're making your revenue is justifying the kind of investment, but it's a much longer game that they're playing. And a lot of them also predict innovating, or that this approach of scaling will take them towards AGI, right? So artificial general intelligence. So there's a lot of skepticism about that. So whether this approach and just adding more compute and more data will get you there. So there is a lot of skepticism, but a lot of these investments are based on the premise that
This will happen.
This will happen, right? So you have seen over the past couple of years, at least, that a lot more compute, a lot more data has led to better performance. And firstly, during training, there was a lot more performance. I mean, data and compute. Now you see that there's a lot of other techniques, and there's a scaling up of inference time compute, which is the amount of compute used during queries that you're asking, that you are doing. So a lot of these approaches are based on this assumption that just the scale of these models will give you returns in their capabilities, and that may or may not hold. So there are opinions from experts in both the directions. And
so if I understand you correctly, looking at it from the way we traditionally look at investments, right? There's an investment cycle and we expect returns to flow at certain durations. That is not going to work here, right? It's like a winners take all sort of game in which when you get to AGI, you get exponential benefits out of it,
That is the belief,
right?
so that
And
is
if
the
you
belief
don't get
that
there,
yeah, so
you
that is
lose
the
out.
belief that OpenAI and Anthropic are operating under, which is
Okay.
why they are willing to put in that amount of money. And the fact that so many other large pools of money are also believing the same thing means that at least there is some
So,
sufficient
so it
money.
doesn't matter, Rijesh, then whether they have $13 million in revenue, right? Their valuations and the kind of money they're raising is going to be much more than that, like much more
Yeah, but
multiple.
see,
so I think we are in the somewhere near the peak, or around the peak of the hype cycle. So there is a lot of, and the way the industry works is that you need to create a hype around your product so that you can attract capital, and then you invest that into building something and creating a market for it. So I guess it's a part of the problem of this kind of a business model. So you need to create that hype, and you are in the past few years you have seen a lot of. So just to give you an example, the number of users, how quickly it has scaled up for chat OpenAI, it's faster than any other platform so far, right? So that is one example of the justification for that hype. So it is not, your everyday, like it's not another cryptocurrency or a blockchain which was supposed to solve a lot of different kind of thing, which never played out, right? So here you see that there's actual disruption of a lot of downstream industries. You see impacts on jobs in certain kind of sectors. So you see all of that happening all at the same time. So there is a lot of anticipation about the impact that it's going to have. But does it mean that it's going to have the kind of, will it lead to artificial general intelligence where it can take up, it's going to be better at any job than or equal to a human at any job that you can think of, so, or any task that you can think of? So that there is a lot of skepticism about that claim.
Okay, let's assume for a moment that the AGI thing is not achieved in the next 5-10 years. Most of the data centers that are coming up in the US, Europe, and China, right? Most of these chips that are used in these data centers are like 3 to 5 years of shelf life, and then they'll become obsolete because we'll have more cutting edge chips coming in. And I think there are a lot of technical limitations with continuing with older chips also. So, in that scenario, when so much investment is really going into the next 3 to 5 years, right? And when revenue is not assured, in the sense that enterprises, I was reading somewhere that enterprises are not paying enough to use these models to OpenAI and others. And I was also, I think, reading somewhere that some of those revenue estimates that these companies might have, AI companies might have, may depend on how many job losses will occur for corporate enterprise users of AI models to start paying more for subscription and so on. So how do you look at this development? Do you think these AI companies are really hoping for job losses to happen for their investment to become worthwhile? And again, this is with the assumption that AGI is not happening in the next 10 years. Rijesh, would you want to try?
So, I mean, see, first thing on the AGI front, what I will first note is that I don't hear Sam Altman talking about it anymore. He has stopped talking about it. Even Anthropic, none of the big shops are really talking about AGI per se. They don't even come out and talk that openly about scaling, right? Most of the conversation is about how they are building partnerships with Oracle and Microsoft and how it is being incorporated into products. So I think even internally, to me at least, it seems like they have started to move away from talking about we are going to bring AGI and AGI will solve everything, and therefore you put in money to actually figuring out ways in which they can get AI to be put to use.
Sure.
Right?
Are
To
they
me, it seems
banking on job losses?
I mean, it's sort of concomitant, right? Like if job losses happen, that's great for AI companies because you would assume that the AI is taking over the job loss. But like, I mean, I don't see it's like it's a new technology that's come in that will lead to job losses, whether it is this set of companies or the next set of companies that will take over, right? So it's that is not to say OpenAI is trying to push for job losses deliberately. They are just trying to push their technology everywhere. And we are already seeing that. We are seeing how ChatGPT and other models are getting integrated into tools that we use on a day-to-day basis. So that will continue happening. Are people using it the way it's expected to be used? I don't think so yet, but maybe it will happen someday, and that might lead to job losses or change the way you work, or you might reduce the number of hirings that you may need to do. I think that's sort of incidental to the fact that these guys are pushing for AI. But I think the more interesting thing is the point you said about, that they're all building up this capex, assuming that there's a 5-year cycle or a 10-year cycle for all of this to play out, right? So I was reading this interesting article. I don't remember where I read it exactly, but this reported conversation between Nadella and Zuckerberg at some conference where Nadella basically said, I hope it doesn't take 50 years for the change to play out. And Zuckerberg said, but that's exactly how we are investing right now. We are assuming it will happen in the next 10 years, and that's what we're doing. So, maybe the job losses will come in 30 years' time, right? For all of the investment that you're doing today. But if it takes 30 years' time, it's almost guaranteed that a lot of the companies that are around today will not be the ones who are making that money. They will die, they'll go bankrupt, some of the assets will transfer. This is exactly the same as what happened during the telecom bubble. During 95 to 2000, same thing happened, right? A lot of WorldCom, Global Crossing, there were so many companies that came in and they invested a lot of capex on fiber optics.
Yeah.
Because almost exactly like this bubble, then there used to be this idea that the internet is growing, is doubling every 100 days. I remember Sam Altman also said something very similar about OpenAI, right? AI demand is doubling every 3.5 months, which is almost exactly 100 days actually.
Yeah.
So it's kind of interesting. So then also people thought the same thing. They invested a lot of fiber optics.
Yeah.
In the case of Global Crossing, their thesis was every part of the globe has to be connected by fiber optic. So we'll lay undersea cables. It took almost a decade after they went bankrupt for their demand for that supply to be met.
Yeah, so it was actually in, I think, early 2010s that the investment they had made a decade earlier started getting to fruition.
But the fact is that all of it played out. It just took a lot longer to play out, and somebody else made the money out of it, right?
Correct.
There's no question that somebody else made money out of it. So, I mean, from a societal perspective, I think it's fine. Yeah, maybe chips have a life cycle of or a shelf life of 5 years, but I think that assumes that the chip is being used 24/7 and is constantly running to build models. But let's say that it bursts and you have all these data centers lying around. Those chips will get used. I mean, maybe a 5-year shelf life of a chip might become 10 years if you don't use it as full thing, right? So it might get used for something else. Eventually, it will get used, but maybe OpenAI will not be around. I mean, I think OpenAI will be around. Maybe some of the smaller shops will not be around. Somebody else will make money. So that's the way I see it. I mean, I think it's fine. Like, when you have this kind of a disruptive technology, this is what happens. Capital comes rushing in. There are people who are willing to take the risks. And it becomes this sort of zero-sum game where everybody is afraid that if I don't get in now, somebody else will get in. I'll be locked out. So inevitably, there will be this boom where there's a lot of money rushing in well before any obvious sign that there is a return on an idea. And then a lot of that money will supposedly go to waste. But the infrastructure or the assets that are being built will still be in the market. It will get reallocated through bankruptcy processes, through other processes, M&As, all of those things will happen. That asset will still stay and it will come back to the market and somebody else will make use of it. So I'm not worried in the long run about what will happen.
Let me, Rijesh, throw a possibility at both of you. So you said, right, folks who invested in the dot-com thing versus folks who actually benefited from him were separate entities, right? Some of the entities that invested heavily in the
So some
1990s,
survived, right? Like Amazon
yeah,
got through the bubble and
yeah,
it
got through.
survived and it's made a lot of money.
But some didn't. Some
Some
didn't
didn't. A
survive,
lot didn't.
right? So in this case, let's say in the AI case, is it, and this is just a possibility, I'm not sure how much it is true, so let me know. Is it possible that this circularity in investment pattern that we're seeing, right? All the rivals are investing in each other. All kinds of AI players, whether they're on the chip designing part, or whether they're on the model part, or whether they're on the infrastructure part, all of them are cross investing in each other. Is this some way of ensuring all of them get through, or none of them does?
I mean, it's more like the way I think of it is that even they themselves are not sure how it will. If you are very sure about your thesis, why would you allow your rivals to invest in it, right? Obviously, you yourself think it's a very variable outcome. You're not certain what the outcome is. So everybody is hedging by saying, oh, I'll put a little money. Microsoft is saying, I'll invest a little bit in Anthropic. I'll also put a little bit in OpenAI. From Microsoft's perspective, that makes sense because they're not in at the cutting edge of the game. So they are diversifying their bets. From OpenAI's perspective, reverse investing in them gives them a chance to either pull in leverage in terms of compute when they need it or support when they need it. So I think that's what it is. But yeah, this is the first time I've seen this level of interconnected investing happening in the middle of this kind of a hype cycle. It is interesting. One big difference though is that none of these companies have net debt actually. If you look at it, they're all sitting on massive loads of cash. So if you look at the telecom bubble that burst, all of those companies were heavily leveraged. They were all taking massive amounts of debt to lay the thing. Whereas if you look at a Microsoft or an Oracle or even OpenAI or Nvidia, they're all sitting on cash. All of them can actually leverage up and easily pick up debt of 200-300 billion, I'm sure. So it's not quite the same as the telecom bust. These guys are much better protected against downsides than those set of companies, right? That is the difference. So we should look at this cross investment as some kind of hedging strategy.
Okay.
Because even they are not sure what the outcomes are going to be.
Bharath?
Yeah, so a couple of points in relation to the previous question as well. But first, let me try and answer this thing. So Nvidia invested, say, 100 billion in OpenAI. Then OpenAI is going to buy chips from Nvidia with the same money. OpenAI also invested, say, 300 billion over a 5-year term in Oracle, and Oracle again is going to buy chips from Nvidia. So it's like a virtuous circle of sorts, right? So, and all of this is on the assumption that you're going to make something which is going to give value to all of these
all the players,
all these players in this circle, right? And if it works out, great, everyone is benefiting from it and all of that. So but if that doesn't work out and there is no future where OpenAI is able to leverage all of these and create something that's of that kind of value, then maybe they're not able to pay back Nvidia. Or if OpenAI collapses, and then the investment also has tanked, and also they've lost the kind of product also that has been delivered to them. So the cycle works as long as there is anticipation, there's this continuous ongoing cycle of investment. So all of this investing in each other has also driven up the valuation of these companies, which gives them access to more capital and which allows them to invest again in each other. So as long as this cycle is going, there's an anticipation of a future that is bright for all of these companies, then it works. But if that bubble bursts in some sense, I think all of them stand to suffer from that kind of a correction. So that's one thing. Now so this is, in a way, it's vendor financing, right? So like if you go to buy a car, and if the person who's selling the car itself is offering you a loan to buy that car, so and you buy that, you take that loan, and you're artificially creating demand so that more people come and buy that product. So it works as long as there are some checks and balances, there are certain kind of mechanisms to ensure that everyone is paying each other. There is all of these things that are at play. But in this kind of a thing, there is a risk that if at all something doesn't play out as planned in the future, maybe there is a risk that all of these companies that are in this kind of a circle stand to lose in a big way.
Do you think they'll all suffer at the same level? I mean, it seems to me like an Nvidia or an Oracle doesn't quite get hit at the same level as an OpenAI or an Anthropic.
Yeah, possibly.
Right. So that's what I'm saying. To me, it seems like I would say, so I was reading somewhere that OpenAI is obviously purchasing chips from Nvidia, and through Oracle again they are purchasing Nvidia chips. but they're also designing their own chips that Broadcom is going to be making.
Yeah.
Now, in the middle of all that, if something collapses, I have a feeling Broadcom will suffer a lot more than Nvidia, right?
Yeah.
So that's why like I understand what OpenAI is trying to do. I mean, they are trying to continue the hype cycle. But to me, it seems like for Nvidia and Oracle, this is more about keeping their demand up on a regular basis, right? Because they are not quite so tied to how it will play out in the long run. Because I'm sure they still see that somebody will win, irrespective of who wins actually. So for
So
them,
let
it is
us,
not quite so bad.
Rijesh and Bharath.
Before we move on, right? So another to what we were discussing earlier. So on whether there is expectation of a massive job loss, which will then that the capital that would then be invested into AI replacing those jobs, and that's what's driving this hype, right? So the kind of impact on the economy and jobs might not be the same and in a very short timeline for all sectors. So there might be some sectors where you might see in the very short to medium term, you might see
more pronounced
a
impact.
disruption,
Yeah.
right? So, for example, content creators might feel that far more in the short term than, say, someone else. Right? Even software programmers might feel that in the short term, because the productivity of software programmers is much more now than earlier, and you might not need as many people to write a certain kind of to build a product, for example. Whereas for AI to create job losses across sectors, there are a lot of speed breakers where you expect a longer learning curve. You expect there to be, say, institutional guardrails, or there might be some kind of a return on investment which has to be possible for it to be adopted in say some other sector, right? So those kind of things will not happen unless it'll happen over a longer period of time. Regulation also needs to catch up for it to be adopted in, say, the healthcare industry. There needs to be use cases which have to be demonstrated. All of these take a much longer time span. So you'll see this kind of things, that certain sectors are at more risk in the short term.
Sure.
But for it to create job losses across the economy, it's going to be a much longer, drawn out process.
Sure.
But the thing here is, for these companies to be able to capture a big enough part of the market, so that as they're running out of data to train on, having access to a large user base gives them data flywheel, right? So there is input that they're getting from users. There's and that is a source of data in itself for them to train on. So you need to corner a big enough part of the market so that you can use that data itself to train and improve their models and all of that. So there is, I think, reason to capture the market so that you can build better products using this thing. So that data flywheel and building it early and getting a big chunk of the market, that is also a reason why you see this hype.
Okay. So, I'll maybe ask the final question now. And again, continuing from what Rijesh had briefly spoken about, also, like, would Nvidia lose out or not, Oracle lose or not, maybe OpenAI will lose out more, and things like that. So I'll take a step back from that and ask the broad question. Let's say AGI doesn't happen for the next 10 or 20 years, and this hype cycle, that virtuous web of inter investments that these companies are making into each other, that runs out steam after 5 years, let's say sometime in 2030, and the AI bubble bursts, right? So similar to dot-com bubble, we have the AI bubble bursting. Of course, the quantum, the scale would be much higher. The sheer amount of money that is involved is, I think, much higher. So just briefly, Rijesh and Bharath, what do you foresee globally? Just 2 or 3 things top of your mind that come as a result of this bubble bursting. And does it impact India in a significant way? Because India's exposure to all of this so far is quite limited. As an investment destination on the AI front, India is not in the top 4 or 5 at this point. So, what do you foresee for the world and in India? Like 2, 3 points briefly.
I don't know. It's hard to predict the future, but I guess if that kind of bursting of the bubble happens, you would have an over-investment in compute. So you will have an oversupply of compute, which will then be available, like how you had an over-investment in fiber and telecom infrastructure, right? Which led to a fall in prices later on. I think even the 2G scam led to a correction of this thing, leading to Indians having one of the cheapest mobile internet access. So maybe something like that would happen, where you have compute available at a very low cost. In terms of so you have, I still see that you don't have too many players competing for at the frontier of these models. A lot of, because of the massive investments that are required, you have maybe a handful of big tech companies that are investing at the frontier of building these models. So if that bubble bursts also, I think it will be these companies who stand to lose or gain in what that kind of a scenario looks like. So maybe one of them or a few of them survive and they're able to capture a big part of the market, but the negative impact may be felt by the others who have invested, who have tried to play that game and compete on that at that level, but have not been able to.
Will it trigger a global financial crisis?
I don't think so. See, I think more than the bubble bursting, right, it will just sort of quietly deflate. The thing about AGI is, first of all, nobody really understands what AGI actually is. So it's very easy to keep claiming that AGI is coming. What is, like, if you look at 4 or 5 years back, the claim would always be that AGI is coming in 18 months, 24 months, right? Now that nobody's talking about AGI in 24 months. Nobody. So AGI will never go away. AGI will always keep coming. It will be 2035, 2040, whatever it is. So in that sense, it won't burst in such a manner that it's very obvious to everyone that this whole thing is unsustainable. It will
Okay.
just become pushed out more into the future as something that is coming. Something similar to, say, quantum today, right? Where the end goal keeps pushing out. That is not to say that there aren't use cases. I think that people using ChatGPT or Claude or Perplexity or whatever it is in their day-to-day lives is almost a settled thing. Maybe the user base is still small today. I think 800 million users for ChatGPT, let's say. So total, let's say, a billion users across all AI models. That's still only 12% of the population. So the users will not. I really don't think it will go away. I do feel like the AI models that we have today, just using LLMs, are good enough that even if tomorrow the hype cycle bursts, I wouldn't stop using any of them. I still think they're useful just on a day-to-day basis. So that there is some level of sort of nascent demand. Maybe there isn't demand for something where you pay $200 a month.
Yeah.
Maybe you're willing to pay $10 a month, right? So that's just valuation drops will happen, but there will still be ongoing demand. And then for people like Nvidia, there will be other uses for those chips. Once upon a time, those chips were used for crypto mining.
Yeah.
Then they became used for AI. There'll be some other use, maybe some research labs elsewhere will take over, and we'll have the next iteration, which is not an LLM based model to get to AGI. We'll have another hype cycle. So I'm not entirely convinced that it will burst and there'll be significant issues. Some of these places will have drops in valuation. We might see one of them going bankrupt, maybe. But broadly, things will sort of just deflate down. But I think, to me, there is value in the AI models that we built already at many levels. I mean, they may not be AGI. They don't need to be AGI. They do a lot of useful stuff. So that's never going away. I mean, I think even if the whole hype deflates, we will still find a lot of companies and labs that are focused on how do you make these things useful. And that will generate demand. So, it won't be quite as bad as, say, the telecom bust.
Yeah. One more thing would be, as a result of this hype cycle, right? So as a result of this expectation that it's going to be transforming everything, so there's been a lot of, from a policy perspective, there's been a move towards creating a favorable policy environment so that innovation happens in your country and or your companies are not constrained by having a harsher regulatory environment. So that has largely been a result of, one, the expectations out of this technology, and secondly, the geopolitics that you're seeing playing out between the US and China primarily, and is also impacting everybody else. So all of these countries are trying to compete with each other to have some kind of a common minimum kind of a regulatory framework. And what that means for some of the risks that are going to be coming out of these systems is also something that's a concern, because in a lot of applications you'll see that there can be a lot of harmful effects of deploying these things, and those guardrails are being enforced after the harm has been demonstrated, because no one wants to regulate it preempt ex ante.
If the cycle bursts, isn't there a chance that those
it
will go away, right?
So when it bursts, it'll go away, but in the lead up to that, I think there will be a lot of scope for things to go wrong as well.
So you would also ask that question around how will it impact India, to which as you just pointed out, I don't see, we've not really participated in the AI boom so far, right? We're only just starting to build our models. We've set up our own compute, but that is, really not anywhere near the scale of the rest of the world, right? It doesn't really compete. So, I mean, because we've not benefited to the upside, I assume that we will not be hurt on the downside if and when it happens, right? So,
I think India's strategy has largely been to focus on the applications of these models to
Correct.
different sectors, and I think that's largely a really sound approach. And so it won't really impact India as such. But on the point that Rijesh was making about whether how much of an impact it'll have on the valuations of these companies, so or on the stock market in the US. So I think if you look at right now, I think 25% of the S&P 500 are these handful of companies. So if there's a big correction, you'll see that there is some kind of a disruption.
I mean, look, see again, obviously it can have an impact on the stock market, but I think we should.
Whether it would have an economy-wide impact on.
To be honest, that's what the stock market is for. It is there for people to take risks and then lose money, and then overall society benefits from crazy people taking risks. So that's okay.
So we'll close in at that lighter note from Rijesh. So thank you all the listeners for joining in, and thank you Bharath and Rijesh. Listeners, if you have any thoughts, if you disagree with any of the views that we have shared, please feel free to write to us, reach out to us, and let us know how you think the AI investment hype or burst bubble, whatever, how it will play out in the next 4 to 5 years. Thank you so much.
Thank you.
If you liked our show, dive into Takshashila's research on technology, strategy, and economic affairs. Check us out at our Twitter handle @Takshashila INST or our website takshashila.org.in.